SoFi stock right now is sitting at $4.77, down almost 5% today. If we take a closer look, the main reason is we did see a downgrade coming in for SoFi. Wedbush downgrades SoFi Technologies to underperform from neutral. They say that fair value accounting may present some headwinds, and they also trimmed their price target to $2.50 from $5. I think that's crazy. So like we mentioned, we saw the main reason the stock price is down today because of the downgrade. But what I really want to take a closer look at, some reasons to remain bullish in this company. A full disclosure, I have no position in SoFi, but it is a company that I tend to follow to some extent, mainly because of the popularity of a lot of my viewers. So we can see, first thing that I think is kind of bullish is how often the CEO puts its money where his mouth is, right? So we can see there was a transaction on May 15th of 2023, so that was today, that the CEO purchased about 108,000 shares, roughly $500,000. In forms of direct purchases, he's done a few as well in May. We saw some in May 5th, where he purchased roughly 30,000 shares at $153,000. We also saw it May 4th at $236,000. So just in the past month alone, the CEO has purchased roughly $1 million worth of shares, and it's only May 15th, right? It does seem like he does tend to purchase when it goes below $5. We can see average price today was roughly $4.67. The other time he purchased a nice bulk on May was when it was roughly $4.70. So we can see there's definitely a price point. Maybe some investors might want to consider that. So something to keep in mind out. There are obviously some form of negativity when we take a closer look at insider transactions. There was a transaction on May 9th from the CTO, and he ended up selling roughly $1 million worth of shares. But a reason for selling could be any reason. Maybe the CTO might just like money and might want to have a lavish lifestyle that he wanted to sell $1 million worth of share. So that's reason number one, right? Just the overall CEO being a nice net buyer, in my opinion, definitely draws confidence for investors. The second reason I think one should or could remain bullish in SoFi is just the company's overall guidance, right? They did recently report earnings, and they did increase their 2023 guidance. They expect adjusted net revenue to be roughly in the around $2 billion mark, and it is representing roughly a 27 to 31% year-over-year growth compared to 2022. And this is up compared to their prior guidance. Their prior guidance was roughly 25 to 30% growth. So we can definitely see that the company did a little bit better than expected, and they expect to see maybe the rest of the year do a little bit better. So now they are able to increase their guidance. Maybe some investors might be worried that this is no longer that growth story. We can see in 2021, it grew 63%. In 2022, annual revenue growth was 53%. In my opinion, anything in the double digits, especially with the overall kind of environment that we're seeing, is pretty strong. So we can see that roughly 27 to 31%. I personally, if I was an investor, I would not complain about that. And those seem like some really strong growth rates for this full year. The third reason to be bullish in this company is, in my opinion, this company is getting a little bit leaner in forms of their expenses and is cleaning off some of the fat. But before we take a closer look, guys, if you are enjoying the episode and you want to support the channel, there are numerous ways you can do it. Just make sure to hit that subscribe, hit that thumbs up, and let me know in the comments, are you an investor of SoFi right now, or are you bearish in this company? Another way is, if you want to learn about the semiconductor market, I do have a pretty amazing membership. Just click join on the button below.
Finally, I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
Right, so during their earnings call, they did talk a little bit about how the company is getting leaner and meaner and how they're working to achieve GAAP net income profitable, and they do believe that's going to happen in Q4 of 2023. Some of the few things that they mention is, hey, adjusted EBITDA of $76 million is now greater than stock-based compensation at $64 million. So unfortunately for the upcoming quarter, I believe they expect adjusted EBITDA to be closer to $50 to 60 million, so we won't see that again, but we can start to see little trickles of quarters where this company's kind of EBITDA is going to be higher than that stock-based compensation, and it's going to be a crucial step for them to eventually go over for them to become GAAP net income profitable. The other thing is because of the bank charter and kind of all the assets that come with it, especially in the lending platform, they have also increased some of those revenues and some of that income coming in there that is also helping them out with kind of achieving this goal of becoming positive GAAP net income in Q4 of 2023. They do mention that they had another quarter of positive GAAP net income for SoFi Bank at $73 million. The final reason I want to discuss today is this company's recent acquisition of a fintech mortgage lender, and more importantly, the answer that management gave during their earnings call when they talked about the synergies here. So we can see on April 3rd of 2023, it was announced that SoFi Technologies acquired a leading fintech mortgage lender. And some investors might be like, Jose, well, mortgage right now is doing horrible, right? There's numerous headwinds with higher interest rates. I'm here trying to buy another house, so obviously I know that firsthand. And the company obviously knows that firsthand as well. But they do give a great response of why they chose this specific lender and why they chose the mortgage market. So during the earnings call, there was a analyst from Piper Sandler who asked a question pretty much explaining, hey, how did you go about choosing this acquisition and what are some of the synergies that we're going to see from here? So, I mean, this is not new to investors. They do kind of start off with a very simple approach saying that they want SoFi to be pretty much a one-stop digital provider, right? They want you to use SoFi for everything as big as your student loans, your graduate loans, your home loans. And once they have you in that and you kind of become pretty strong customer awareness with them, now those customers are going to be able to use you for maybe other forms of banking, for other forms of investments, for other types of personal loans. So I think that makes sense. But the second thing that they mentioned is they wanted to grow mainly here in the mortgage market to also be able to grab market share and then kind of share those synergies. But when they were looking for what to acquire, they wanted to make sure it was something that they can integrate pretty easily to their platform. So not only were they looking for a company that had that kind of market share, but they were also looking for more of a fintech player who kind of had some form of technology that can integrate pretty great with their platform. And they did mention that they've worked hard over the last 3 years to find a technology and a platform that they could buy at a great price, a small dollar amount that could be integrated pretty quickly and allow them to accomplish the objectives that I kind of mentioned above from that vertical integration. So while the acquisition within itself is small, I really like to get inside the brain of how the acquisition process was thought out. And to me, the way they explained it, it does show kind of a lot of, in my opinion, gives me a lot of confidence that management knows exactly what they're doing. And I do believe they can make a really small acquisition like this be really, really worthwhile for investors. So overall, management seems to be, especially CEO, definitely seems to be in the right place. And that alone will be another reason for me to be bullish in a fintech player like SoFi. So those are the 4 reasons I believe investors might want to remain bullish in this company. Let me know what are your thoughts on the comments below. Take care, have a good day, and see you next time.